Hi, everyone. Every few weeks, we like to come to you with some thoughts on the incoming economic data and then translate that into how we're forming our investment views. The trouble is, right now, as of this recording, we're not getting that much economic data because the US government is shut down, and that includes the statistical agencies that collect and report most of the data that matters a lot for how markets process the state of the economy and how the Federal Reserve is likely to act accordingly with interest rate changes. So for now, we're not entirely flying blind, but we're mostly flying blind. So I thought what I'd do is talk about some of the alternative data, the data that we see from private sector sources that are still being collected and reported because they're not part of the federal government, and how that's going to become much more important the longer this shutdown drags on. Now, the good news is if you're watching this and the shutdown has already ended, these are still things that we look at in conjunction with the data from, say, the Bureau of Labor Statistics, Bureau of Economic Analysis, to kind of inform our holistic view. And we know the Federal Reserve looks at them as well. Today, I'm going to focus on the labor market. The September payrolls report was supposed to be published on October 3rd. Sitting here on October 2nd, it looks like that's going to be delayed to some extent. So, what do we look at instead? We look at the ADP report. This is a private company, a company that does a lot of payrolls. Maybe for the company that you work at, you see ADP on your payroll information. So they have a lot of information about the comings and goings of employees, and they can collect a rather robust sample of private sector data that they can use to keep track of how many employees there are. And month to month changes, they tend to correlate to some extent with what we normally get in the BLS payroll report. From a month to month basis, there is some volatility here. The ADP number tends to be a bit more volatile. So what you can see here is that the September number was quite poor. It was negative 32,000, and then the August number was revised down from positive to slightly negative, which means that 3 out of the last 4 months now in the ADP report have shown negative payroll growth. When we stretch that out and we look at it over a 6 month period, you can see that the rate of net job creation has gone down to basically zero. That black line is showing you the ADP number, and that correlates extremely well with the BLS private payroll number as well. So month to month, a bit more choppy, but over periods of 6 months, certainly a year, these two lines tend to line up, and they're both telling us the same thing, which is that net hiring has basically slowed to a crawl in 2025. The other thing we can look at is consumer attitudes about the labor market. A lot of times when we look at consumer sentiment surveys, there's a lot of biases in there. People answer a certain way because they think they should, and they don't necessarily reflect people's actual views of the state of the economy or their own personal financial situation. But one thing that people do tend to give us pretty good answers on is the state of the economy, how they feel about the economy moving forward, and how they feel about the current state of the economy. This University of Michigan number is telling you about expectations for unemployment. Is unemployment going to go up or down over the next year? And you can see we're at a close to a record high level of, or percentage ratio of people who do believe the unemployment rate is going to go higher over the next year. Now, the unemployment rate has gone higher modestly over the last year and certainly over the last 2 years from very low levels. But you don't tend to see this much pessimism with respect to the unemployment rate, except when the economy is in or about to enter recession. Similarly, when you ask consumers about the current state of the jobs market, this is a different consumer confidence survey. This is from the Conference Board. They do what they call the labor market differential number, which is basically what percentage of people say that jobs are plentiful, what percentage say jobs are hard to get, and then we look at the difference between those two. It's inverted on this axis. So the higher this number moves, the less well people think that the labor market is doing at the moment. And that has a very intuitive correlation with the unemployment rate. So if you want to get a sense of whether the labor market is getting worse or better, consumer attitudes give you a pretty good kind of real-time estimate of that. Similarly, if you talk to businesses, specifically manufacturing businesses, and you ask them specifically, are you adding workers or are you shedding workers? That answer, what they give you, that's that blue line. Again, a little bit choppy month to month, but it does exhibit some pretty clear trends. That gives you a pretty good preview as to what manufacturing payroll growth is going to do over the next 3 months or so. So right now, what it's telling you is with this number well below 50, that means that employment in the manufacturing sector is in contraction territory, and we should continue to see that black line move down and the number of people added to manufacturing payrolls on net continue to be trending, down close to zero or indeed negative as it's been. Last thing I'll talk about is the survey with respect to small businesses. Again, small businesses reporting employment isn't necessarily a good leading or lagging indicator for the labor market, but small businesses' attitudes about how well their sales are doing, does have a correlation to the labor market. You can see here that this is a question, a very specific question. Are poor sales becoming your biggest problem as a small business? And the number of businesses that report this as their largest problem, as that goes up, it tends to be associated with higher unemployment rate a few months later, which makes sense. Small businesses employ a lot of people. At times when small businesses are reporting slower revenue growth or negative revenue growth, they're less likely to be adding new workers and may even be shedding some of those workers. We haven't seen the unemployment rate move up as quickly as some of these indicators would tell you it might have in 2025. And part of the reason may be because we simply don't have a lot of growth in the overall size of the labor market, which is capping to some extent the rate at which the unemployment number is moving up. Last thing, just to wrap it up here, go back to the ADP. Remember what I said about small businesses and how they employ a lot of the workers and create a lot of the jobs in the US. If you break down the ADP report by the size of the company, larger companies actually added workers, 33,000 workers added for companies that are 500 employees or above. Below 500 employees, you saw tens of thousands of workers moving off. Again, that's consistent with what we were seeing in that small business survey, with more of that hard data. Are small businesses hiring? Are they making capital spending plans? All those things are heading in the wrong direction, and that's consistent with these small business numbers that we're seeing. So we're going to be keeping an eye on all this data, regardless of whether the government stays shut or reopens, and we'll obviously have a lot more to say if we do end up getting that government data about how this picture all fits together and informs our fourth quarter outlook. Thanks very much for watching.